All right, so let's talk about the myths. So for this mindset portion of the course, I want to talk about the myths. I'm going to address some of the common myths that we hear, a lot in within this industry on social media and different platforms. So the reason that I'm starting with the myths is to make sure that we have a good solid foundation and we're not approaching our trades with, counterproductive beliefs and counterproductive myths that are just really not well thought out or explained that well, given a lot of context. So let's just go ahead and jump right into it, okay? Myth number one, you need a lot of money to trade. Okay, so we know that this is not true. You definitely, especially now, you do not need a lot of money to trade. There are a lot of different ways to trade, a lot of different products to trade. Futures definitely being one of the what I think are the best. So you definitely do not need a lot of money to trade. We definitely know that this is not true. We'll get into this a little bit more later once we start talking about the strategy and how you can execute this and everything. But that's just absolutely not true. I started with $1,000 in my latest account, and actually what I'm doing right now, I only started with it only took me about maybe $400 to $600 to get started with this account. But like I said, again, I will, we'll get into that at a later time. All right, so that's definitely a false myth. Myth number two, trading is not profitable in the long term. So again, this is one that we should definitely know is not true. There are plenty of examples of successful traders who have been doing this for decades, who have been day trading for decades, who have been day trading for, years and years and years and years and years. All right. So this is definitely not true. I don't necessarily understand the belief structure behind this one, but this is one that a lot of people believe in, mostly coming from investors who like to buy and hold. And, it's kind of like, they have this or mentality, and I'm going to kind of steal from Gary Vee with this one, where he says we live in an and world, not an or world. So there can be one and the other. It doesn't have to be one or the other, meaning that there can also be a lot of benefits for buying and holding, investing, as well as day trading. And also, the market needs liquidity. Where does most of that liquidity come from? It comes from day trading, okay? From all participants, whether that's the market makers, the wholesalers, retailers. The market needs that liquidity in order for it to get the kind of price action that investors need to make money off of their investments, right? So this is definitely a myth that is false, okay? Myth number three, strategy or indicator blank does not work. And this one is just not true, because all strategies work, just not all the time. Even an incomplete strategy works sometimes, but over the long term, it's probably not going to work if it doesn't have all the pieces that it need. But it's not necessarily about the strategy. It's more so about your execution and, your mindset and your approach to your trading, right? And I think this comes from the idea that losing trades is a bad thing, but we know that losses are just part of the game. And also it comes from, I hear this a lot from people who backtest strategies. But the problem with back testing is, one, you got mechanical issues where there's a problem with the software. I mean, it's a computer, so they will make mistakes. I've back tested before, and what I learned from my back testing, that there are a lot of mistakes that you have to account for with the programming. And also, it's just impossible with a back test to account for every scenario. So it's not necessarily about the strategy, it's more so about the execution. It depends on different parameters such as stop losses and how you manage the position that it'll take forever to try to work out every scenario, because it's going to vary from person to person how that person executes the strategy. Okay, so we can go ahead and say that this myth is not true. Okay, all right. Myth number four, market makers are out to get you. So I know this one to not be true simply from the advice that I've received from former market makers and, just studying market makers, whenever I get the benefit or the pleasure of hearing the share experience and stuff from other market makers, that they're not necessarily out to get you. And you got to understand the role and the goal of a market maker. Their goal is to make money on the spread, and the way that they do that is they buy orders from institutions, and then all they're doing is filling the orders in a way that they can make money off the spread. So for them, it's just a business, right? They're in this business to make money just like we are. So it's not necessarily, they don't necessarily care about any individual traders or a group of traders. What they're doing is they're just like any other business, just like Walmart would put out a commercial, or they would have advertising and marketing to get more buyers to come to their store so they make more money. Market makers are just moving the price around in a way that they can advertise to other market participants in a way that allows them to make money off the spread, So we're all in this trying to make money. They're not, it's no evil thing. You got to remove the emotions from, what you think market makers do, and just stick to what you do, right? Which gives us a good segue into our fifth myth. And our fifth myth is 90% of traders fail. Now, okay, you're probably going to give me pushback on this one, but just let me explain, okay? So it's not necessarily that 90% of traders are more. Yeah, that number fluctuates, but it's not necessarily that those traders fail. The correct terminology is that 90% of people that attempt to trade quit, right? So it's my philosophy that you only fail when you quit. So as long as you're continuously trying to be successful at something, you haven't failed until you just stop trying to do it, right? So this one is just, not true based off of that alone. And I get where this statistic comes from, because all of those traders that were tracked to come up with this statistic, they did quit, okay? So therefore they failed. They failed because they quit. So this is important to know, because this lets you know that if you want to be successful, all you got to do is keep pushing until you figure it out. If you continue to give effort and you continuously try, then you will figure it out. It's just a universal law that the more you do something, the better that you will get at it. So if you just keep trying, you keep taking it seriously, and you keep approaching it with discipline and all the good stuff that's going to help you be a successful trader, you will figure it out and you won't fail. You will be successful over the long period of time. So we got to have realistic expectations, right? So how soon or how long it takes for you to be successful at trading, it's going to vary from person to person. I can't really give you any hard numbers on how long it should take you to start seeing consistent profits, but that's just something. It has a lot to do with your, with this who you are and your history and your experience with different things in life. If you just continue to stay at it and plug at it and you take it serious, eventually you will be successful at it, okay? And you don't have to be a part of this 90% of traders that fail or that quit. As long as you don't quit, you should see success over the long term, okay? Now, that also takes us into our bonus round. And our bonus myth is you are trading against the world. Now, this is one of my favorite ones, and it really comes down to a matter of perspective. And later on, in a few minutes, I'm going to get to an example of how buyers and sellers can have a win-win situation, right? Which a lot of times when people talk about how you are in competition with other traders, they say that your win equals someone else's loss, or your loss equals someone else's win. That necessarily doesn't have to be the case. But it's not even really important to even look at it that way, because there are so many participants in the market, which it can be a win-win situation. It can be a win-loss situation. It can also be a lose-lose situation. All right. So just getting into this, the things that are going to make you a successful trader, being consistency, your execution, your discipline, all of that stuff is, that's more to it. All of these things are in your control, right? So you are really at competition with yourself. You're in competition with your beliefs, which this section of this course addresses some of the beliefs. If you have beliefs that are not serving you, if you have beliefs that are counterproductive to your success as a trader, that's what you're trading against. That's what you are at competition with, right? So if your execution needs work, where you're missing trades that you should have taken that would have, gave you profits to account for some of the losses that you're going to take, whether that be because you misread the charts or because you had a counterproductive belief system that, that kept you out of a position because you were blaming something outside of yourself, whatever that is, your execution is fully in your control. You can just decide to, for me personally, one of the turning points for me is when I just decided to take the setup, no matter if I thought it was going to work or not, right? It's either going to work or it's not going to work. Your goal is to use the probabilities in your favor, and you got to execute. So all of this shows us that you are really in competition with yourself. You're not in competition with any other traders. No other trader is in control of your consistency. No other trader is in control of your execution. No other trader is in control of your discipline. No other trader is in control of things that are truly going to make you successful as a trader. All right. So real quick, I'm going to switch over to a screenshot that I have of a chart to where I can illustrate a win-win situation between buyers and sellers. And this is going to show us how we're not really at competition with each other. In fact, this will show us how traders sitting on both sides of the market can actually work with each other to have a win-win situation. All right, so let me go ahead and switch over to the screenshot. All right, so here we have a nice chart. It is a pretty chart. It's a really good chart. And it's a random chart, also known as today's chart. Okay, so what I want to illustrate here is just an area, and we're going to talk about, it's too big. Let me go ahead and get something a little bit smaller than that. All right, so I'm just going to draw that right there, and we're going to take it up to here. Okay, we're just going to talk about this little area right here. That's what we're going to focus on, this nice little area right in here. Okay, so let's keep the focus here. All right, so let's just say hypothetically, let's just say I'm a buyer and I got in right there looking to take this higher. Okay, I got in into my trade somewhere in here. Price doesn't matter, that's not what we're talking right now. I'm a buyer right in there. Okay, now we also know that in this market we have buyers and we have sellers. We have people that are trying to trade it long, we have people that are trying to trade it right. Now of course a lot of people will say, okay, we had some shorts that came in right there. Matter of fact, let me go ahead and use a different color on that. Let me go and use a different color to illustrate this. We had some shorts that came in right there. You came in, you bought down there, you squeezed them out, they lost money, you made money, right? Okay, that is one perspective, and that perspective is something that happens. All right, but the only reason I'm bringing this up because a lot of people has this idea that we're kind of like doing one-for-one trading. So what you will hear is when you make money, someone else lost money, which could be true, but it doesn't necessarily have to be the case. And why I know this is because me and my trading partner, we both, a lot of times we end up seeing a position in opposite directions, and we both end up making money on it. So this is how I know that you can trade in both directions, and our both sides can take a position or trade and end up winning. So let's just say, for instance, I bought here, right? And I'm trading this to, let's say I want my target to be right here off of this support. Let's say I want my target to be right there, that support. So I bought in here and I start, taking profit up here, right here at my target, right? Now also, at the same time, as a short, I'm looking for the price to be extended. So as a short, I can be looking to short this level, right? And if I'm shorting right there, right, I'm gonna have to take a little, I'm gonna have to go red a little bit depending on where I got in, right? But if I'm getting in here, where's my target? Well, actually, I can have a target right here off of the low of that structure, right? So when as the buyer, once I get up to my target, I can sell to the short here. This short can take this and he can also make money, and we can just keep exchanging this back and forth, right? Now, also, another reason why I know that we can have win-win situations in the market is because this is what market makers do, all right? So market makers, they'll talk to each other and they can be like, all right, we want to move this price, whatever we're trying to do with the price, right? So market maker A can buy down, they can have an agreement to buy down here. Market maker B can have an agreement to sell up here, and they can just keep having this back and forth exchange, moving the market up or doing whatever they're trying to do with each other. Both of them are winning on both sides of the trades. Now, like I said before, a lot of times just not trying to do it on purpose. Me and my partner definitely does not have enough capital put into the market to where we're moving the market in either direction. The market doesn't even really care about our orders like that. It doesn't move at all when we place a trade because we're not placing sizable orders at all. But we actually do end up having positions like this to where I will get in at a certain level and I will end up getting out kind of where he gets in, and vice versa, right? So this is how we can know that someone doesn't have to lose for you to win. There can be a win-win situation. Of course, there are so many participants in the market that there are win-lose situations, and sometimes there are lose-lose situations, right? So your loss can equal the loss for someone else, all right? So it really just comes down with whatever you believe, whatever makes you feel the best. Are your beliefs serving you, or are your beliefs working against you? And this is something that you're really going to have to just sit down and be self-aware and do some self-work on to know that, are your beliefs serving you, or are your beliefs working against you? All right, so that's going to conclude this section. And in the next section, what we're going to talk about is getting focused.